Dear students, welcome to my channel. In the previous video, we have discussed various adjustments including bad debt and provision for bad and doubtful debt. In this video, let us try to work out a problem which is having interest on capital, provision for bad and doubtful debt, bad debt, depreciation and closing stock. So the question says, from the following information, prepare a trading profit and loss account and a balance sheet for the year ending 31st March 2020. Capital given 60,000, drawings 10,000, furniture 5,200, bank overdraft 8,400, taxes and insurance 4,000, creditors 27,600, buildings 40,000, stock opening 44,000, debtors 36,500, rent received 2,000, purchases 2,20,000, carriage on purchases 3,600, sales 3 lakh, sales return 4,000, general expenses 8,000, provision for bad and doubtful debt it is 500, salaries 18,000, commission 4,400, bad debt 1,600, discount allowed 3,200, received 4,000, and the total of the trial balance is 4,02,500 in the both column. Adjustments: closing stock 40,120, depreciation on building and furniture value is given, bad debt 500, provision for bad and doubtful debt 5% on debtors, and interest on capital it is 5% per annum. One more adjustment that we can add, that is unexpired insurance or prepaid insurance 400 rupees. So let us start with the items given in the trial balance, that is capital, drawings, furniture, bank overdraft, taxes and insurance, creditors, building and stock, that is opening stock. So let us take opening stock to opening stock in the debit side of the trading account 44,000. Next is debtors, rent, purchases. Take purchases in the debit side of the trading account. Purchases 2,20,000 you write in the inner column and see that whether return is there. Purchases return, sales return, general expenses, salaries, commission, carriage on purchases, and there is no purchases return, so that the same value in the outer column 2,20,000. Then carriage on purchases, amount 3,600. By sales 3 lakh less sales return. Sales return is 4,000. 2,96,000. Then closing stock 40,120. There is no other direct expenses to be taken in the trading account, so only these are the items to be considered. So let us balance it. Three lakh 36,120. 0, 2, 5, 8, 68,520 gross profit. So the same value you have to write to the opposite side. By balance, write the same value by gross profit brought down 68,520. Now we have to continue writing the profit and loss account. Look at the trial balance. Capital, drawings, furniture, bank overdraft, taxes and insurance. So take taxes and insurance. Do taxes and insurance. Amount 4,000. And look at the adjustment prepaid. That's prepaid insurance 400. Balance is 3600. See, the next item is rent received. So buy rent received 2000. Next item to general expenses 8000. Salaries 18,000. Commission 4,400. Bad debt we will take later. Discount allowed and discount received. Discount allowed 3,200. Discount received here 4,000. Now the adjustment for bad debt and the provision for bad and doubtful debt. My dear friends, you write down like this: provision for bad and doubtful debt, new, add bad debts, less provision for bad and doubtful debt, old. So here you have to work out this value. This value is the bad debt given in the trial balance plus given in the adjustment. Both you take. And this is the value given in the trial balance. So this you have to work out. And this value will be given in the trial balance, that you deduct the balance you have to write in the outer column. Now here, the provision for bad and doubtful debt calculation. Take the debtors given in the trial balance, 36,500. First you deduct bad debt given in the adjustment. You deduct that. That is 500 rupees. So 36,000. Out of this value, compute 5%. 5% of this value is 1,800. So this is the value you need here. 1,800. Then add bad debts. Bad debt given in the trial balance is 1,600 and in the adjustment it is 500. So 2,100. So total is 3,900. You deduct the provision for bad and doubtful debt in the question, that is 500 rupees. So in the outer column you write 3,400. So this is the adjustment. Here what we have done is new provision, add bad debts, less old provision. New provision we calculated here 1,800. Bad debt that we took from the trial balance and from the adjustment 2,100 added. So total is 3,900. Less provision for bad and doubtful debt given in the trial balance. Now you see all the items taken or not. In the trial balance you have taken everything. But in the adjustment it is stock that we done, depreciation we haven't done, provision we have done, unexpaid insurance we done, interest on capital we haven't done. So interest on capital. To interest on capital, 60,000 is the capital and 5% is the interest. So it is 3,000 rupees. Then depreciation, building, it is given in the question 2,000. Similarly, for furniture, it is 500. So these are the items given. Once again, you please cross verify all the items I have taken from the trial balance as well as from the adjustment. If done, then we will balance the profit and loss account. Therefore, the net profit transferred to capital account is 28,420. Now let us see how we can prepare a balance sheet, and for which let us start with the capital. Capital given in the question is 60,000 rupees. Add net profit. It is 28,420. Add interest on capital. It was 3,000 rupees. So the total is 91,420. Less drawings. Drawings was 10,000 rupees. So it is 81,420. Now you look at the trial balance and see the remaining items. That is creditors, $27,600. Bank overdraft, $8,400. Now take the assets. Debtors, 36,500. Less bad debt given in the adjustment, 500. Less provision for bad and doubtful debt. This is 36,000. Provision was 1,800. So the balance is 34,200. Next item is buildings. $40,000 less depreciation, 2,000 equals 38,000. Next item given is furniture. 5,200 less depreciation, 500. Balance 4,700. Now you look at all the items in the adjustments also taken. The first adjustment is closing stock. Closing stock should be written in the asset side of the balance sheet, 40,120. Next is prepaid insurance. 400. Then interest on capital we have taken here. Bad debt we have taken. Provision for bad and doubtful debt we taken. Depreciation on building. Depreciation on furniture. All that we have taken. These are the two remaining that also we have taken. Now we can total it and let us see whether the balance sheet both sides are equal. So both the sides of the balance sheet showing a same balance, that is 1,17,420. So this is how we have to work out a problem if provision as well as bad debt given in the adjustment. So my dear friends, you please study new provision, add bad debts, less old provision in the P&L account. And in the balance sheet, this is the adjustment. Bad debt given in the adjustment has to be deducted. Similarly, new provision also has to be deducted from the debtors. This is the adjustment and the balance has to be written in the outside. Hope this video is going to be useful for you. Please practice as much problem possible. The same problem or different problem with the same adjustments, you please work out. If you have any doubt or support required, please leave it in the comment box. If you are watching my channel for the first time, please subscribe it. Please share it to your friends and other students. Thank you very much.